So yes, definitely markets are closing quite on a on a good note. If you look at both the frontline indices, they have closed up in the green, and even the broader end of the markets, they've also participated well in the rally. But yes, we have taken above that Nifty to be above 23,250 mark, and this is coming in on the back of some cooling crude oil price and of course the recovery that we have seen in the banking counters in today's trading session. But yes, let's go across to my next guest of the show to talk more about markets and of course how it looks like for the long term. We have with us Anil Rego, who is the founder and fund manager at Right Horizons PMS. Anil, good afternoon. So good to have you back. There was sharp swings in the market, but we settled in the green today. But I mean, basically, since the market has recovered in April, we are still down by about 5% on an index level. What do you think is keeping the bears active, despite crude cooling off by about 15 to 20% from war peaks, and RBI also announcing a slew of measures to attract foreign inflows? Do you think today's relief rally can be seen as the first step towards a broader recovery going ahead?
Yeah, definitely. Actually, there are a whole lot of negative events, especially on the global side, which has been sort of impacting India. And I think RBI also responding to that, and we also saw a few of measures earlier as well. So I think the good part of it is that maybe the government is being proactive and they are looking to see how to respond back. Now, the global sort of events, starting right from if you look in very short term, the Broadcom related, fall that happened, and along with that, you had, strong U.S. Jobs data, and that also spiked interest rates. So these three things together sort of, kept globally, markets pretty rattled. And what is interesting is, India has not necessarily fallen as much. So actually, I would say that this is the great part of it, that we didn't see Indian markets break down, while you had some very, very negative, impacts in other markets. So, and including, many of the emerging markets which did well. But that itself, I think, is one reason why sort of RBI came in, because emerging markets, started attracting, attention. Unfortunately, India was not part of it, right? So how do you sort of bring some of the attention back? And I think uh, today's comeback, and I would also say yesterday not falling as much, keeping in mind the global cues. I think both of these are in some form showing that the strength is underlying strength is there. And I will bring this back as an example to small caps, right? In up to probably December, small caps did very poorly. Okay, but despite a lot of negative news, despite the war-related news, etc., you didn't find small caps fall, right? And then subsequently they ended up going up well. So I believe similar is the case with respect to the markets and broader markets as well. So I would think that today is a bit of a good confirmation of the relative underlying strength, and that I think that the correction hopefully is over. Is what I believe.
Okay, got it, got it. But from these levels, what is the kind of upside that you're seeing, at least for the medium term?
Yes. So I would believe that the first thing is we have to cross our highs that we saw earlier, and so that in my view will be the first one. Post that, I think if that sort of breaks on the upside, we've had a good consolidation. Then I won't be surprised if you see even a 12-15% return from there. So I think I would keep my fingers crossed and say that when do we break out, and if we break out on the upside, then that's going to be very positive, sort of in the medium term.
Okay, got it, got it. Anil, I mean, today we have seen that banking stocks have definitely rallied quite strongly after RBI said that they will be absorbing hedging costs for banks which are raising fresh FCNR deposits. Now, given that we have already seen that deposits were already lagging for banks in the March quarter, what would this mean in terms of actual inflows?
Yes. So in the past, some of the measures like this, have seen some reasonable impact and inflows. I think for banks, it's definitely a big welcome that they have the hedging costs sort of taken care of in some form. So that is definitely if you look at that also was could be seen in the banking sector sort of doing well. And I would believe that it's not going to be very quick, but definitely one should see some reasonable flows coming in. And for us, NRI flows definitely has been something to which is good for us, and I'm sure that will sort of help.
Okay, got it. Anil, apart from this, we also had RBI expanding the FAR route earlier. They announced some tax relief too for the foreign investors on government securities. The key concern is if these measures are enough to offset a weak rupee, because even despite on Friday we did see rupee hitting a 4-week low, slipping below 94. Today it's once again back above 95 now. So what lies ahead?
Yes, so I would believe, typically if you see when you see some extreme volatility and a lot of global concerns, etc., I think government action ends up being a turning point. Okay, so I believe that is, the first step that the government has come in and come in so strongly in, multiple ways. So that definitely is something that one would believe would be positive. One would hope that flows also come in, and I think the government debt like initiative that is definitely going to be a very very positive one, and I think Indian debt the yields are very good, and along with that with hedging it's something that would sort of take care of part of their risk. And today you also have some of the leverage facilities, etc., which are also been thrown open. So a combination of these, I definitely believe will help give comfort to the rupee. And in some form, I think the rupee and markets go together, especially at such extremes, right? So normally you may not find that when the rupee appreciates, the index goes up also, because of economic strength. But at times like these, it's also a signaling thing that even global investors, etc., then are comfortable, and we are not seeing further depreciation. So the rupee is very important, and I believe that some of these measures will help. In fact, if I look at a broader view, even irrespective of all of this, if you go and study the rupee, it goes sideways to down as well for a period of time, and then it sort of covers all of its ground, and it moves up. In fact, the study that I did, of say 25 years, the rupee depreciation was only 3.2% per annum. Okay, the only thing is, it moves in fits and starts, and the moves whenever it does is reasonably large. Before this move, it saw almost a 3 to 4 year sideways to down movement. Okay, and I would believe that coming closer to a psychological level of 100 rupees, my view is that we should see strength coming back to the rupee, and hopefully that will also coincide with our view on the markets also getting stronger.
Okay, got it, got it. And then, so if indeed foreign investors do make a comeback to India, do you think banking stocks will become their first port of call?
Yeah, what is interesting again, if you look at data, while there were outflows from FIs, FPIs, you would find that the number of stocks universal increased for them. So basically, it means that they have actually been going to a bit of mid caps as well. Definitely now the banking sector also, will become, a sector which I think should attract foreign investments as well. And as a sector, I think it can absorb a lot more because you have a good set of both private sector and PSU stocks which are there. So I believe that yes, the banking sector will be a place that FPI is coming to.
Okay, got it, got it. Anil, India has been anyway off for many of these global investors. In fact, for the first time, we have seen that in the last 26 years, India Inc. is out of the MSCI EM top 10. Do you think that's purely a valuation issue, or because of AI and technology opportunities, traders are looking elsewhere for more compelling growth stories?
Yes, so I believe some of it is market cycles. So actually, at times when you find them at extreme points like this, I would bet on the upside. In fact, I would bet that over a period of time it may go up. Definitely, uh, money chases money, so where the returns are, and so in this case, you have a lot of the AI stocks doing well, and subsequently you also had in a couple of emerging markets, you have the chip makers, so they also did very well. So that is definitely something which will continue to get flows in my view for some more time. But I think over a period of time, including in the US, today you're seeing some bit of rotation that you're seeing to other sectors and stocks. We'll have to see whether it sort of sustains. But I think over a period of time, people also come back and ask, okay, what are the valuations there? Is it getting excessive? And I believe also if you have some of the large IPOs coming also from the sector, I think all of those combined together, I would, it would take some flow away. But I think over a period of time, and I would believe that over the next 12 months to 18 months or so, I believe that, things will settle down, and I believe investors will also start looking for opportunities outside AI, and I think flows will come back. And it's also that some of the emerging markets were undervalued, and they have also come up right now and they're matured. So those opportunities may not be there as much as they were maybe 6 months back, but now that will also change in some form.
Okay, got it, got it. And how sensitive is the India's earnings story to crude oil prices given the Middle East tensions? And what are your estimates for FY27?
Yes, so definitely, one of the reasons also for the rupee depreciating is, crude, and that is going to impact in a reasonable way. But again, even on crude as well, I believe that hopefully we are closer to a settlement, on the war, and so that is one. But I also look back and see, that if you see earlier oil spikes, right? The impacts are not very long, for not very long period of time, and a combination of that, along with some reject that happens either in people's usage and also sometimes in terms of alternate supply that sort of comes in. We've seen this crisis, and we still had supply from coming up from various other areas. So, but definitely, the war will be impacting in the short term. But I think over a period of time, now that if the things get settled, you may find that there is a sudden surge of supply also that comes in, right? So I'm not so so much expecting oil prices to spike significantly, from where it is right now. You may find, some bit of volatility depending on news flows, but I believe that, that will also get capped, and hopefully over a period that will also come down and, support us in the medium term.
Okay, got it, got it. So, I mean, if earnings growth slips, that's what everybody has been estimating. I think, okay, that's what everybody has been estimating, that earnings growth might see cuts in FY27. Do you think the current market valuations can still hold up?
Yeah, so definitely, I think that there is some impact that you'll see both in this quarter and potentially in the next quarter when we see some of the war continuing, and supplies getting impacted, etc. Because it has a wider impact on number of ancillary industries or downstream industries and upstream industries, basically of oil. So that is something which definitely has its impact, and the negative environment as well. So I would see some weakness, but I don't expect it to be prolonged there. And if you saw the past 2 quarters previous to this, small cap earnings growth also came back. Now it's important for things to settle down quickly, and hopefully if it does, then we should not have a problem. And that's our predominant view, that we don't think earnings are going to really go down into negative territory, etc. It may be weaker and muted for some time, but I think it will pick up.
Okay, got it. Anil, what theme are you finding attractive? Even though you mentioned that the broader universe also looks quite attractive given the kind of earnings growth we have seen in the last quarter. Even from that space, any themes, any sectors that you would advise investors to look at?
Yeah, so we like a few. One of is our own industry, which is wealth management and capital markets. Okay, so there
Hmm.
is one. Manufacturing definitely, is something that is benefiting from China plus one and Make in India, etc. And some of the export incentives. I think that is something which will help. Okay, we like even ones which are not impacted by any of this, which is like hospitals. Okay, so that is something that we like, and possibly defense is another sector which we think should do well.
Okay, got it, got it. All right, Anil, with that, we have to let you go. But, thank you so much for connecting with us and appreciate your time. Okay. All right, that was Anil for us. And of course, the markets have been, settled in the green today. And of course, we have snapped the 2-day losing streak. And this is coming in on the back of the recovery that we've seen in the banking stocks. But for now, that's all we have for this edition of Closing Bell. We'll be meeting with you for markets tomorrow. But until then, do stay tuned to Money Control.